This real estate journey can seem daunting, especially if you're a newbie. But what if I told you that with the right steps, this path could lead you to some incredible destinations? Today, with Property Profit Investing, we're breaking down the top 10 fundamental steps for beginner real estate investors. So, whether you're looking to buy your first property or just curious about the process, stick around until the end. Number 1, Real Estate 101, Understanding the Basics. Before venturing into real estate, it's crucial to grasp its fundamentals. Let's start by laying the foundation. Think of real estate as more than just homes. It's a wide universe, including land, commercial spaces, and even that rustic barn out in the countryside. When you invest, you're either banking on the property's value going up over time or earning a sweet rental income. Remember, the better you understand the different types of real estate, like residential versus commercial, the smarter your investment choices will be. Number 2, know your financial strength, setting the budget. Before you even set foot in a potential investment property, it's crucial to take a hard look at your finances. How much can you afford? Start by evaluating your savings, debts, and monthly income. Tools like online mortgage calculators can provide a preliminary sense of your buying power. And don't shy away from professional help. A financial advisor can offer insights on loan options, tax implications, and more. In real estate, going in blind can be costly. Make sure your financial lens is crystal clear. Number 3, define your why, the power of purpose in real estate. Every successful venture starts with a strong why. In the world of real estate, this means setting clear and actionable goals. Are you in it for the monthly cash flow from rentals? Or are you eyeing the prize of property appreciation over years? Maybe you're seeking a vacation home that doubles as an investment. Jot down your aspirations. This clarity not only helps in guiding your property search, but also serves as a beacon during challenging decision-making moments. After all, knowing your why ensures you stay on course even amidst the market's waves. Number 4, location, 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 spotting prime real estate. You've likely heard it said, but it bears repeating. Location is key in real estate. An otherwise perfect property in a not-so-desirable location can quickly turn into a regrettable investment. Do your homework. Research cities, neighborhoods, and even specific streets. Look for areas with growth indicators like new infrastructural projects, low crime rates, good schools, and accessibility to amenities. Sometimes, emerging neighborhoods can offer lucrative deals, and catching these opportunities early can lead to significant returns. So always have your ear to the ground and your eye on the map. Number 5, building your dream team, because real estate is a team sport. In the world of property investment, the phrase "it takes a village" holds true. You're stepping into a game where collaboration is key. Start by seeking out a seasoned real estate agent who knows the ins and outs of the local market. Pair this with a good home inspector to ensure no hidden flaws go unnoticed. A financial expert can guide you on loan options and tax nuances, while a reliable attorney ensures your deals are airtight. Think of this as assembling your all-star squad, where each player contributes to your investment success story. Number 6, navigating the financing maze, the backbone of your investment. Every real estate deal begins with one essential question: how will I finance it? The answer isn't always straightforward. Let's unpack some popular avenues. Traditional mortgages. Offered by banks or credit unions, these usually require a 20% down payment, though some might offer lower. Your credit score, income, and debt-to-income ratio play pivotal roles in approval. FHA loans. Ideal for first-time home buyers, Federal Housing Administration loans can require as low as a 3.5% down payment. However, there's a catch. You'll need to pay mortgage insurance, which can add to your costs. Hard money lenders. These are short-term loans often used by investors who aim to renovate and sell a property quickly. They're less concerned with your credit and more with the property's value, but interest rates can be steep. Real estate crowdfunding. Platforms like Fundrise or Realty Mogul allow you to invest in real estate ventures without buying property outright. You're pooling funds with other investors to finance larger projects or portfolios. Private money lenders. Think friends, family, or individual investors. These loans can be more flexible than bank loans, but ensure everything is documented to prevent future misunderstandings. Each financing avenue has its pros and cons. Analyze them in the context of your goals, risk tolerance, and investment timeline. Number 7, property types. Choosing the right fit for your portfolio. Real estate is a vast universe, and within it are myriad property types, each with its distinct advantages and challenges. Single-family homes. These are standalone houses meant for one family. They're often the stepping stones for newbie investors due to their familiarity and simpler management. Multifamily units. Think duplexes or apartment buildings. They can provide multiple streams of rental income, but management can be more intricate. Commercial real estate. This encompasses office spaces, malls, and warehouses. They often come with longer lease terms and can be lucrative, but they require a significant initial investment. REITs, Real Estate Investment Trusts. Instead of buying property, you buy shares in property-focused companies. It's a way to invest in real estate without the hands-on challenges. Vacation rentals. Properties in tourist hotspots can be rented out on platforms like Airbnb. They can offer high returns, but can be season-dependent. The key is to assess your risk, capital availability, and management preferences. Some investors thrive with the hustle of vacation rentals, while others prefer the passive income stream from REITs. Number 8, market research. Your compass in the real estate jungle. Stepping into real estate without adequate market research is like navigating a dense forest without a map. Here's how to ensure you're on the right path. Local economics. Understand the employment rates, major industries, and economic growth of your chosen location. Thriving businesses often indicate a robust rental market. Demographics. Age, family size, and income levels can determine the type of properties in demand. Historical price trends. Are property prices in the area rising, falling, or stagnant? This can guide your buy and hold strategies. Vacancy rates. High vacancy rates might indicate a less desirable area, whereas low rates could signal strong rental demand. Future developments. Any upcoming infrastructural projects or major commercial establishments, these can significantly boost property values. Local regulations. Some areas have strict rental regulations or zoning laws. Being aware saves future headaches. Number 9, risk management, the armor you need in real estate battles. Real estate investment, while promising lucrative returns, doesn't come without its share of pitfalls. How you handle these risks can make or break your journey. Here's a detailed look at safeguarding your investments. Diversification. This age-old wisdom still stands. By investing in different property types, residential, commercial, industrial, or venturing into various locations, you distribute risk. For instance, while the commercial market might dip, residential properties in another area might boom, balancing your portfolio. Insurance. Consider it non-negotiable. Comprehensive property insurance protects against natural disasters, while liability insurance shields you from potential lawsuits. For those renting out properties, landlord insurance can cover loss of rent and property damage by tenants. Thorough inspections. Before purchasing, enlist a professional to inspect the property. This uncovers hidden problems, from faulty wiring to structural issues. The initial cost of an inspection can save you a fortune down the road. Education. Like all industries, real estate continually evolves. New laws emerge, market trends shift, and technologies advance. Engage in continuous learning, be it through seminars, courses, or real estate forums. The more you know, the better decisions you make. Building a contingency fund. Real estate investments can have unforeseen expenses, emergency repairs, unexpected vacancies, or market downturns. Having a reserve fund acts as a buffer, ensuring you're not caught off guard. Networking. Build relationships with fellow investors, brokers, and real estate professionals. They can offer insights, share their experiences with specific properties or areas, and even alert you to potential red flags. Legal expertise. Real estate transactions can be complex. A good attorney can guide you through contracts, ensuring you're not unknowingly taking on liabilities. They can help structure your investments in a way that minimizes potential legal ramifications. By understanding and implementing these strategies, you're not just hoping for the best, but ensuring that your investment journey is as smooth and profitable as possible. Number 10, creating a solid exit strategy, ensuring your investments stand the test of time. Buying a property is exciting, But have you thought about how you'll eventually sell or move on from it? That's where an exit strategy comes in. It's your game plan for when and how to sell, so you get the most money back or avoid big losses. There are multiple exit strategies to consider, each tailored to different investment types and timelines. Buy and hold. This strategy is about patience. You purchase a property, rent it out for a steady cash flow, and wait for the right market conditions to sell, typically aiming for long-term appreciation. Fix and flip. Buy a rundown property, renovate it, and then sell it at a higher price. Timing is crucial here. The longer you hold post-renovation, the thinner your profit margins might become. Wholesaling. This is for those who prefer to avoid the hands-on aspect. Secure property under contract and then sell that contract to another buyer, often another investor, for a fee. Lease options. Offer tenants the choice to buy the property after a set period. It's a way to secure potential buyers while earning rental income. Every investor should craft their exit strategies early on, even before purchasing a property. By doing so, you'll have clarity on your investment goals, the timelines involved, and the returns you're aiming for. Being forearmed with knowledge ensures that when it's time to exit, you're doing so in a position of strength, not out of desperation. Laying the foundation for your real estate journey. Jumping into the world of real estate might seem daunting, but remember, every seasoned investor started as a beginner. The key is to stay informed, make plans, and always be prepared to adapt. From understanding the basics of property markets to crafting your exit strategy, every step you take is a learning opportunity. It's not just about buying properties, it's about setting up for future success. As you embark on this journey, keep in mind that patience, continuous learning, and a solid network will be your best allies. Dive in, stay curious, and watch your investments grow over time.